Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be looking at the short-term bubble risk. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. Now, it has been a while since we've spoken about this indicator, but essentially what it is it shows you the extension from the 20-week SMA to the upside or the downside. If you look at Bitcoin and its relationship to the 20-week moving average, we of course been various periods above this level and below this level. And actually, this was one of the indicators we used in early 2021, which is what ultimately made us expect the summer lull. If you think back, it almost feels like a different time at this point. But looking at sort of the extension from the 20-week SMA, we were sort of up at these levels back in February. And that was when I first started to get suspicious of this move. And we talked about, getting into a summer lull in sort of the middle part of 2021 after we reached this sort of extension from the 20-week SMA. You can see that every single time the extension from the 20-week SMA is somewhat diminished. Okay, so I think that's something important to look at. Note that we don't always make it up to these levels. Of course we could make it there, but you'll also see there are plenty of rallies that you don't actually quite make it there. In 2019, we didn't really make it to the trend line. We didn't really make it there in 2015 or 2016 either. You can see that we made it there in 2021 and in 2017, and then of course in 2013 and in 2011 as well. So there's only been a few times where we sort of made it to that downtrend line. But if you take a look at the short-term bubble risk, what it's essentially showing you is the extension, whether it's to the upside or the downside of the price of Bitcoin with respect to its 20-week SMA. And I mean, you can pretty clearly see where the bear market years are. You have 2014, you have 2018, and you have 2022. Now, normally after you get these years, you then go into sort of these recovery years where you might spend a little bit of time above it. You might spend a little bit of time below it. You can see that's what happened in 2015. You can see that's what happened in 2019, and then of course early 2020 as well, right? A lot of light blue and dark blue throughout this region with some intermittent moves above the 20-week moving average, just like we had back over here as well. And arguably what we're seeing today. Currently the latest value right now it shows you as 1.33, which means we're more or less heating up, right? We're not just above the 20-week. We are at least, extended from it to the tune of approximately 33% or so. So it is at least an element of a higher risk than if we were just above it. For instance, last week, or not last week, but a few weeks ago, we actually came back down and held support at the 20-week SMA. Now, I've had a lot of people ask me, is this enough to sort of merit new all-time highs immediately? I don't generally think it is. I mean, I know that what we've typically said is in order to see a bull run that leads to new sustained highs, you'd like to see a multi-week test of it, not just a wick. And we know what, historically, there's not a whole lot of historical data to look at, but remember this one was sort of more or less just a wick right here. And while it did lead to a nice move back up to the upside, we ultimately did not sustain it for very long. So I do think there is more of an element of it's likely just going to be a repeat of what we saw, during the prior recovery years where we go back above, we're back above and below the 20-week SMA for just very brief periods of time, like 3 months above, 3 months below, or 6 months above, 6 months below, something like that, where we're just sort of just chopping around in a range, ultimately trying to sort of find the confidence to really go into another run to new all-time highs. Again, the times when you can see that this metric has turned really dark red and sustained it for a period of time, 2021, 2017, and then of course 2013 and 2011. So they are few and far between, but of course we do live for those moments. But I did think this was an interesting way to sort of visualize the price of Bitcoin. You can also imagine that there is some level of diminishing extension from the 20-week SMA. We showed it on the chart over here, of course, but you can also just kind of visualize it here if you sort of draw a line more or less through these peaks, but also recognizing that it typically takes a lot of tries to even get to the point where you see the extension from the 20-week SMA that's over 100%. Okay, 100% extension from the 20-week SMA is very heated territory, and that typically only occurs every 3 or 4 years or so, with the last time occurring back in 2021. So I suppose you would expect it to get 20 or 100% above the 20-week SMA, or approximately there, um, maybe sometime in late 2024 or 2025. And between now and then, it'll likely just continue to be somewhat choppy. But anyways, if you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. And again, we do have the sale on Into the Cryptoverse Premium at intothecryptoverse.com. See you guys next time. Bye.